Alright, yo, what is up, guys? Welcome back to another video. But yeah, in today's video, we're going to be going over a quick little PowerPoint. I'm going to be providing you a full risk management plan completely free. I'm also going to be going over a full checklist for the ICT silver bullet strategy. Quick little PowerPoint, and after that, we're going to hop into the charts and go over a few examples. So let's get straight into it. Alright, so let's start off with the risk management plan for NASDAQ, short for NQ. Now, I've gone ahead and written down an example for a 150k account with Top Step. Now you get a 4.5k drawdown on this account. Your profit target is 9k, so that is a 1 to 2 risk to reward. Now max contracts that you're going to be using on this account is 15 micros. Okay, so that is pretty much one contract and a half. But if you want to play it safe, then 15 micros is the way to go. Now, your max risk per trade should be no more than 25 handles. So that will give you around $750 per trade, right? And not all trades are 25 handles. Sometimes I'm risking 15. So really, you could size up on opportunities where you're not risking 25 handles. Now, this would give you around 6 trades to blow the account, okay? And I don't know about you, but I've never taken 6 trades that have resulted in a loss in a row. Okay, it's very hard to do. So this should give you the correct amount of time, and it should give you enough trades for you to pass your evaluation account and get funded. Now, for the people that do not want to take this approach and want to take a more riskier approach, I recommend you use maximum 2 to 3 contracts, risking around 1.5k per trade. Now, this would halve your trades, so you'd have around 3 trades to blow the account, so you'd have to take 3 losses in a row. Now, if you're highly confident, I recommend you do that. But anyways, your take profit should always be at 25 handles or a swing low or high that is nearby. Okay, so what do I mean by that? You always want to take something off, so partial profits. Let's say if you're trading 15 micros, you want to take around 50% off your position once you're floating around 25 handles in profit. Now, I do like this approach, but what I like better is setting my take profit at a swing low or swing high, meaning a buy side or sell side liquidity level that is in close proximity to 25 handles. Let's talk about your second take profit. So usually my second TP is around 50 handles, and this is also near a buy side or sell side liquidity level. Now my final take profit is an external buy side or sell side liquidity level. Now this is usually around 100 handles or even more. You know, I will trail my stop, and if final TP wants to get hit, it can get hit. If it doesn't, then I really don't care, because I've already secured TP1 and I've secured TP2. So hopefully that makes sense. Now that is a full risk management plan for you guys. Just a quick reminder, guys, the live signals room is still available for only $30 a month. Now the prices for the signals room are going up this week. So lifetime access are currently at $180 one-time payment, and they are going up to $300. Now the monthly subscriptions are currently at $30 a month. Now they will be going up to $50 a month. So if you are interested in getting your training to the next level, go make sure to click that link in the description and secure your spot for only $30 a month. Now I just want to share this week's results. So on Monday, we ended up taking a short trade and making 30.75 points. Tuesday, we took another long trade and we secured ourselves 83.5 points. Now Wednesday, we didn't take any trades as it was CPI and FOMC, so no trade opportunities presented themselves. Thursday, we took another short trade that ended up running for over 72.75 points. And finally, Friday, we took another short trade and bagged ourselves 29.75 points in the bag. Now this week is actually quite unique as we haven't taken a single loss. We've actually secured ourselves 216.75 points for the week. 0 losses. Now I don't want to be that guy saying that we don't take losses, as every single trader takes a loss. That is just the reality of trading. I'm not trying to sell you on that dream. Now, anyone that does do that, please run away from them, because that is just not the reality of trading. However, some weeks can go well, and this is just one of them weeks. But yeah, I just wanted to show you these chats for transparency reasons and show you the results for this week. Now, if you are actually interested in getting your trading to the next level, go click that link in the description and secure your spot for a discounted price whilst those prices are still available. Anyways, let's get back to the video. All right, so now that we've gone over your max risk per trade, how much you should be risking and where to take profit, let's go over your stop loss. Okay, so let's say, for example, in a short trade, you always want to put your stop loss above a swing high, or you want to put your stop just above the displacement candle high that created a fair value gap. Now let's go vice versa. Let's say you're going for a long, you want to put your stop loss below a swing low or the displacement candle that created that fair value gap. just below that. Okay, so hopefully that makes sense. That is a full risk management plan telling you where to take profit, where you should put your stop, and how much you should risk per trade. We're now going to be going over a full ICT silver bullet checklist. So I'll take a screenshot of this. This is just a brief summary of what you should look for when trading the silver bullet. Okay, so number one, you're going to obviously mark out your buy side and sell side liquidity levels on a 15-minute time frame. Then you want to wait for a liquidity sweep. After that, you want to see a displacement and a market structure shift. That will give you your fair value gap, which is your entry. Now you want to enter inside of the 950 to 1010 macro. Stop loss above swing high or low. Target opposing liquidity, then you take partials at 25 handles, 50% of your trade goes off. You move your stops to a swing low or swing high, and then you target the opposing liquidity. Okay, so now let's go over macro times. Now, the strategy that we are trading is the silver bullet, and this occurs between 950 and 1010 macro. Okay, so your entry should be inside of this 20-minute time window. So let me make that very clear for you guys. Okay, if it is 10-11, you do not enter. Okay, doesn't matter if you get a model or setup. As soon as it leaves that macro time, the trade opportunity is gone and you shouldn't be taking anything. So let's say you do actually get an entry inside of this 20-minute time window. You do not want to hold your trade past 11 a.m. New York time. And usually if the trade is an A+ setup, all of your TPs will get smashed before 11 a.m. Okay, now let's say the 950 to 1010 macro is very choppy and you don't get many trade opportunities. Now you'll move on to the second macro, which is a 1050 to 1110. Now, same rules apply for this macro. However, you just don't want to hold your trade past 12 a.m. As soon as it turns 12, that's when the lunch hour macro begins. So you want to exit all your trades before lunchtime. Now, let's say both AM sessions are terrible, okay? And you haven't taken a single trade. If this happens, which is rare, you want to move on to the New York PM session, which is from 2 p.m. to 3 p.m. So anyways, now that we've gone over all of those things, let's jump into the charts and go over a few example trades. All right, so let's go over the first trade example. Now, first things first, what you want to do is you want to mark out your buy side and sell side liquidity levels. So as you can see here, this is our sell side liquidity level and the obvious swing high here, which is our buy side liquidity level. Now, you're going to wait for one of these to get swept. Now, what I recommend you do here is skip back to the video where I provide that checklist and you can go through it manually and tick off the boxes. So as you can see here, we've ticked off box number one. We've marked out our buy side and sell side liquidity levels. Now your second criteria is you want to wait for a liquidity sweep. So there you go. That is your sell side liquidity sweep. Now we want to see a displacement and a market structure shift in the opposing direction. Now before I do that, I'm going to mark out my 950 to 1010 macro 20-minute time window. Now your entry and your trade will happen inside of this macro. Okay, so let's wait and see here. Okay, so do we get displacement? Yes, we do. That is clear displacement. Do we have a market structure shift? Yes, we do. We have broken above this swing high here. All right, so the next on that checklist is fair value gap. Now, this is your fair value gap here. You would mark this out and your entry would be off the edge of the fair value gap. Now, you don't want to risk more than 25 handles. So as you can see here, there is another fair value gap at the bottom. So we're going to make sure to cover this area just in case price does decide to come down and tap this area and then bounce. So we're risking 20 handles, okay? Now, if you put your stop at a swing low, you're risking 35 handles, which is way too much. And that is not a part of the risk management plan. So we're going to be risking 20 points here. And your first TP should be at 25 handles. However, in this case, the buy side liquidity level is at around 50 handles, which is usually where our second TP is. So we're not going to put our first TP there as it's too far away. We're going to target this 1 minute fair value gap here at 31 handles, okay? And also I just want to point out there's actually a unicorn model, okay? If you don't know what a unicorn model is, please go make sure to watch other videos on my YouTube channel that explains it very, very clearly. All it is, in brief, is a low, high, lower low, and a high, high. This is a bullish breaker that is paired with a fair value gap. So that's 2p to raise. That is why it's considered such high probability. But anyways, that's besides the point. Today we're teaching you silver bullet. So anyway, let's see how this trade ends up playing out. All right, and there you go. That is your first take profit hit. Now you want to take 50% off of your position here and set your stops below the swing low. So that is pretty much setting your stops to break even. And your second TP is going to be at this buy side liquidity level here for 50 handles. Okay, so let's see if TP2 gets hit. All right, and there you go. take profit 2 has been hit. So now I would trail my stop into a profit below this swing low here. Now we actually don't care what happens with the trade, as both of our take profits have been hit. So this final take profit is just a bonus. So whatever happens, happens. You're trailing your stop now into a profit. So if you get stopped out, you've still made money on that trade. But usually my final take profit is always at session liquidity. So London session is from 2 a.m. to 5 a.m. New York time. Now whatever high is created in that time, you want to pick. So the highest high is at 2 a.m. here. So this will be your London high. So as you can see, if this trade actually hits, we've made 83.5 handles. Let's see how this plays out. All right, and look at that, final take profit gets hit for 83.5 handles. Now guys, as you know, I am that guy, okay? I do take these trades on a daily basis inside of the live signals room. So I'm gonna show you these chats for transparency reasons. Now, we took this exact trade, as you can see, 10 a.m. New York time. So I send in the trade as soon as price taps into that fair value gap at 10 a.m. I give you my entry price, long NQ, stop loss placement, TP1, TP2, and final TP. All right, boom. TP1 has now been smashed. So now I'm setting my stops to break even, which is below that swing low there. I tell you to close 50% of your position. It's very important to take partials once TP1 has been hit. So 31.75 points secured on that trade. Boom, TP2 smashed. So you should be around 8% out of your position there. 50.5 points secured. Okay, and finally, final TP smashed, 83.5 points secured. Congratulations to everyone that held that trade to final TP. All right, so now that we've gone over example number 1, let's go over one more example before we end the video. So first things first, once again, you mark out your buy side and sell side liquidity levels. Now I'm actually gonna give you a quick tip here, which is very, very useful. Now you wanna mark out session liquidity. So what do I mean by that? That means your Asia lows, Asia highs. Usually London highs and London lows gives you a very good reference point to where the market is going to head next. Okay, so say if London highs get swept and then you get displacement inside of that macro, that is usually a very, very high probability setup. News came out and ended up sweeping London highs. Okay, so as soon as this happened, automatically that is our liquidity sweep, and now I'm looking for displacement in the opposing direction to target these equal lows down here. So as you can see, these are very, very clean equal lows, and whenever the market generates this type of liquidity, that's not going to stay like that for a very long time in the market. Usually that will get taken out very, very quickly. So once this got swept, I was waiting for a displacement. Now we did actually get a displacement, and once we did, I hopped down into a lower time frame and I was watching these two fair value gaps here on the 1 minute time frame. The most and highest probable trades, you want to wait for that 950 to 1010 macro, which is the silver bullet hour. So I was hoping that this fair value gap doesn't get filled and this trade doesn't play out before we reach the macro time, and luckily it didn't. So I'm actually going to skip forward. So price came up at around 9:40 a.m. New York time, filled in that fair value gap. Now the reason why I wouldn't enter short here right now is because we're not inside that 950 to 1010 macro. Okay, so the entry is inside of this time window. Anything before that or anything after that, we don't take. Okay, now I follow that rule religiously, so I'm not going to take this short. Now, if we consolidate around this area and we reach 950 time, and then we get another tap into this fair value gap, I'm going to take that trade. So let's see how the trade actually plays out, and if we get another entry. Let's see if we get another tap in at 950. Yes, we do. I'd be entering short here. I would keep a stop placement just above this displacement candle's high here, risking 24 handles. So now that we've done that, let's see how this trade plays out. All right, there you go. Boom. TP1 smashed. So okay, so once that happens, you want to close 50% of your positions and put your stops just above this swing high here. We're going to target this swing low here, which is 48.75 handles. That's close enough. This is going to be our second TP. So let's see if we get that. All right, so many traders have probably been stopped out in this area here because they might have jammed their stops just above this swing high here. Now, it's very important not to do that. Once TP2 gets taken, that's when you can start moving your stops in a more tighter area, if that makes sense. So anyways, take profit 2 has been smashed, 50 points secured. Okay, so now final TP, we're aiming for those very, very clean equal lows at the bottom. And at this point, I'm moving my stop into a profit just above this displacement candle's high. All right, and there you go. Final TP has been smashed, so you'd be fully out 100% of your position there, and you've secured yourself 73.5 handles for the day. We actually did take this trade once again inside the live signals room. So I just want to show these chats and show you pretty much a feel for how it is if you were inside. So every morning I send in an analysis of the chart that we are watching. I tell you to mark out specific levels, areas that we're also watching, pretty much tell you the game plan for the morning. So as you see here, as soon as price taps into that 1 minute fair value gap, you get your short alert, stop loss placement, TP1, final TP1 smashed, 25 points secured, close 50% here, stops at break even, growing 50 points, moving stops into profit. Now final TP gets smashed here, so I'm closing out for a total of 72.75 points. ES at the time took the lows, hence I closed out early. However, final TP did get smashed. And yeah guys, that is going to be it for today's video. But yeah, if you haven't already, please like, comment, subscribe and share, and I will see you in the next one.